Good morning, everyone. It is Thursday, April 22nd. I cannot believe we are in April. And this is Nadex Morning Analysis. I can't believe we're in April, and meanwhile in Chicago, it feels like it's
36 degrees outside right here, so I don't know.
30 degrees in Chicago.
Global warming.
Man, fun.
See, everybody's staying at home. Nobody's driving cars now, so we don't have any global warming. Now we're going back into the ice age.
Yeah, there we.
More importantly, if it gets too cold, it's going to freeze all the blossoms. We're going to have no wine this year, so that's even a bigger.
That would be a problem. That would be a problem. Or if it gets way too cold and we don't ever get warm again, it'll be like the movie Snowpiercer. And we'll have to live on a train.
Then everybody's moving to Florida, and then see what the election looks like.
Hey, dear Lord. All right. Before Brian and I get into hotspots for the market today.
I see what you did there.
Quick, let's change the subject. Squirrel. I do that with the dog. Trading involves risk. It may not be appropriate for everyone. Any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session and a little bit of a fun one. Please do not construe anything that Brian and I say as a buy or sell recommendation. We are doing this for your education purposes only. So the news stories, top news stories today, a couple of things. One, the European Central Bank just announced their policy. I believe it was, a half hour ago?
Yeah, 7:45.
Yeah. So an hour ago.
7:45 and 8:30. 8:30 was the press conference.
Oh, that's what it was. So they announced their policy. We're going to talk about that and how that's been impacting the markets. Also, initial jobless claims came in. A little bit of a split. Initial jobless claims are definitely lower, so that's encouraging. They did have to revise last week's estimates up a little bit, but if you recall from last week, it was a monster shock surprise down. So really, we are still trending down. I mean, that's certainly encouraging with initial jobless claims continuing to decline. When we talk about things like this, we're talking about the economy's heating up. We're talking about the central bank policy on interest rates. Interest rates globally, these are the types of things that would potentially impact inflation. So the two hotspots we're going to look at today, and this is why we're doing that boot camp in 2 weeks, is this is probably going to be the story for the next 6 to 9 months. Oil and gold are going to be moving around. Gold definitely tied to interest rates, and oil, it's all about supply and demand. And as Brian was mentioning earlier, demand is down, and so yeah, great. Maybe that's how we'll get rid of global warming, or at least some of our carbon emissions. So we're going to talk about gold and oil today, and if we can, we'll take a quick peek over at the indices. Brian, I'm going to flip it over to you to give us a rundown on what the European Central Bank said and things of that.
Yeah, I mean, there's a couple things out this morning. I mean, obviously, this is the ECB is leaving rates unchanged. They're going to continue to do their bond buying until at least March 2022. So it seems like a lot of the projections that we're hearing are always next year. They confirmed significantly faster pace of PEPP this quarter. So it's not the ideal kind of report from the ECB. Germany's having some major problems with their third wave, as we mentioned yesterday. So that's probably putting a kind of an enormous drag on the European economy. And again, vaccine rollouts and things like that will help kind of speed that up. Although I think at this point they have not, I heard it yesterday, they have not reviewed or not returned their contracts for J&J and AstraZeneca vaccines. So they're not getting kind of new, they're not using those two companies right now, but they say that they're not excluding them from future options or something like that. So basically they're not buying any more right now of those two. They're only doing Pfizer and Moderna. But in the future, they could potentially go back to them if they needed. So that's not the best news either for the ECB. No. As far as global warming and working, I mean, there was this down here as well, that working from home makes people more productive. Kind of interesting. Only if you don't have kids at home. If you have kids at home, it's a little bit more difficult. Just saying, been there, experienced that one. So here's oil, and as you mentioned, So oil's bouncing back and forth. Again, yesterday we talked about bouncing off the 60.93 level. Right about 9:30ish is when this thing decided to take off, and then we saw an immediate reversal at 10:30. And again, we mentioned that 10:30 was going to be a good time, right, because of the crude oil inventories. And what did it come in as? 0.6. And again, does it matter what the actual number is? No. What matters is the fact that they expected to be a minus 3.7 million barrel down draw, and it came in positive as 0.6. There was a surplus of extra oil. We gained oil. And what was the response? Straight down. Okay. So again, this is why we talk about news trading and oil and what you can do with it. It doesn't move every time. No, it obviously doesn't. But when you click on it, you can see that, yeah, they're not right too often, right? Once in 2021 have they actually hit the forecast dead on. So again, that's kind of how you got to play this one. So all that movement down drove it right back in again. And this level now has been hit multiple times. And we can see it's had some problems. It kind of pushed through, but it is providing at least some type of base stability right around that $61. With the ECB's kind of talk or conversation, not necessarily the best news, but it is counterplayed this morning by obviously the U.S. unemployment claims number being down. So oil is probably going to be a bit of a battle back and forth again. If we do, and this is on a 30-minute chart right now, this could be again, it was a nice burst when that data came out, and then we're seeing that little bit of a pullback now. If we start to drive higher, I think, if we continue this across, this was the European Open yesterday, right? I think this is a level that we still need to respect. I think the 62 and really 62.50, probably dead on it, is the psychological level that we're running into sellers at. I think that's where we look to take profit up top. There's a little bit of buying and selling over in this range as well, but for the most part, if we start pushing up and we start getting a rally back into that side, again, anything that really turns the indices positive and kind of creates some type of positivity as far as things are getting better, demand is good. Again, that could drive this higher. And again, I think 62 is where, I think by the end of the week, we come up and tag that 62 number. I think it's a lot more likely that we hit 62 than we hit, the 59-ish level to the downside.
All right, perfect. Glad I was able to go on mute there for a second. I did want to bring up the Nadex chart, and this is what Brian's looking at. And how could you potentially play this? And this is a 15-minute chart, and I am kind of zoomed in so you can see it nice and big. That level below where it's definitely just below 61, right around 60.90 a barrel. It definitely was finding some support. It tested it a couple of times, just never really completely blew through it with a solid move down. There's some wicks down here and some small candles down below. But we did on that ECB announcement, and it is pushing oil higher now. We are seeing some stabilization, really kind of in no man's land at the moment, but something to be looking at. Oil is going to be volatile. I mean, you can actually see from yesterday, it is moving over $1.50 a barrel, kind of regularly. So there is opportunity as oil makes some swings, some hot spots in the markets. I mean, you could look at some of these moves. I mean, even from yesterday, and Brian's going to be doing the session again at some point, but these parabolic moves where you end up seeing, an very quick emotional move and then a retracement that's almost as emotional. We might get a little mini version of that right here where, it spikes up in 30 minutes. And I don't know, is it going to roll over and come back down here again? Hard to tell, but a way to play this, whether you think it's going higher or lower, these binary options, you've got your different levels, and you can certainly take a look at, where do you think oil's going to finish at the end of the day? These are the daily ones. So I just wanted to share that. Brian, I'm going to flip it back over to you for a look at gold.
Yeah, here we mentioned gold. So yesterday we were talking about 1790, 1761 as being our two areas. Right around that 9:30 of the open, we got that nice little spike up, and literally within like a half hour, we kind of started going in the sideways movement, and it really didn't do anything. It stayed at the 1793 until really the European Open here. It just kind of chopped back and forth again, and kind of an ugly I can't even say whipsaw because it literally just kind of went like a dollar up, dollar down, dollar up, down. It just went sideways. Now we did have kind of a parabolic move up, and we're kind of grinding back down again. Really today the issue is going to be we really don't have any type of US based data. There's really a lack of catalyst today. Yesterday we had some, but for the most part, I mean, this is what we got going for the rest of the day, and there's nothing here. Tomorrow morning we do have some of the PMI, and again, this will help move gold a bit as it's showing recovery. But right now, as far as gold goes, I mean, it's so choppy. It's one of those markets that's a little bit funkier to trade. I would say we do definitely have a level that's kind of interesting right here. What makes it hard is, again, we were looking for, really getting short. You can see it's up in the pink area. It's a level that I wouldn't say there was explosive movement off of it. I mean, it's okay here, but I mean, really, the only thing that jumps out at me is this level down here at 1761. I mean, that would be a $20 drop today with no news is probably a bit difficult. And even taking this for a Harry Potter, I think I may be a little bit concerned with it just because, again, we have this little kind of this pattern over here where we have, 3 wicks in a row and they're all getting a little bit higher, a little bit higher, a little bit higher, a little bit higher. Is it typically a pretty telltale sign that we got some buyers? So, I mean, literally, we're kind of sitting here like this. We have like one barricade, and to break through 2 levels like this on top of each other is going to be some blockbuster news. So I'm wondering if we kind of come down to the 1776 range and then maybe start to take a bounce up in preparation for all the PMI news tomorrow.
Right.
And again, this is all big data. We won't talk from now till then because this is all in the middle of the night. But retail sales is a big one, expected to be positive, but less than what it was before. And again, these services, all these things in here. And again, expected to be less, going farther down, a little bit lower, a little bit lower. The German flash services, I think, is going to be a big one to watch. Just because we're at 51. Remember, if we go below 50, it shows a contraction again of services. They're having their 3rd wave right now, so if it does go below 50, not going to be surprised, and that's going to be a kind of a little bit of a shock there. And again, it will affect gold. And again, we have our number in the morning, which if it drops below, again, these are all things that are going to move gold because remember, purchasing managers index goes with pricing. Pricing gets past everybody else. It's kind of like the core, kind of one of the core measures of inflation down the road. So look for a small bounce is probably what I'd say. But again, I think we kind of we more or less go sideways between 1790, 1761 for the next 2 days.
I mean, Brian's showing you one economic calendar. I just dropped into the chat the economic calendar for daily FX. In fact, you know what? I'm going to actually share that.
And right now, look, the sentiment is 80% of people are net long right now. That was 83, 84% earlier in the week. So people are starting to kind of go the other direction, whether it be profit taking or just, reversing their positions. And again, remember when this is above really 75, 80, it tends to be when we get very contrarian about it. So it's starting to sneak back into the range that we want. And again, it's starting to go down. So
yeah, I did want to just everyone to see, on the link, what you get. This is something we haven't talked about a lot of, but this is a pretty great tool. You can customize it for your time zone. You can customize it for the different regions around the globe, what you want to see, what you don't want to see, even the importance or significance levels, high, medium, low. And then you can see what's coming up. Hey, what's coming up tomorrow in the higher medium category? This is what Brian was talking about. Is there's a market puts out their PMI information globally, so you'll get the Euro data in the middle of the night, the UK, but the U.S. Market info comes out 8:45 here. So what is that? That's 9:45 Eastern. So things to be looking at. It's nice to be able to have tools like this handy for you to be looking at when announcements are being made and when you might want to be ready to trade the markets. In fact, Brian, I believe that's the topic you're covering at our Golden Oil Summit, is trading around news events. Yes,
doing it with news. Yeah.
So they're really rather important. All right. With that, I know we're coming up on the end of the day. Brian, I'm going to flip it back to you. Do you want to just take a quick peek?
Yeah, I'm just going to give them a couple last little things here. Great. And again, this is why I love news. I mean, right now when we look in the 24-hour movement, the dollar CAD is down 129 pips. That's over double its regular daily ATR, what it's supposed to do. So enormous opportunity. Obviously, you guys aren't sure what this is. We mentioned it the other day that, listen, you got to watch out for monetary policy statements, right? We had this BOC monetary policy statement, the overrate, it didn't change, but it's the language that they're saying. And again, some of the things that they're basically pulling back as much buying as they did, meaning the Canadian economy is in a really good state right now. That slammed this in, right? Why I like this and why I think it's important is we have a level down here. We've talked about it before. I mean, as you guys can see, just very, very briefly, we have multiple hits at the same level here. There was the open from the other day. There's another hit. So, if we have a break of the 124.62, there's not buyers again until 124.22. So again, a little 40 pip runner we could have later in today. And again, that's dollar weakness, Canadian strength. And I also think The same type of scenario here with these multiple touches on a level and disappearing. We also kind of have the same thing. We have ES again rallying back up into that 41.64, but again, it's been tested here, tested here, tested here. It's only going to hold for so long. Could this all of a sudden be the kind of catalyst for us to jump higher? Yeah, and NQ is in a similar situation. Again, you can see it here, huge drop, another drop, another drop, and each time the lows keep going lower. So again, that could be another launching point above 13,946, and then also YM, kind of the same thing. You can see it's kind of leveling out here, kind of making that shelf. If we extend that across, you can see that it keeps, and again, this is on a 30, but if I move it to here where the big push is, you can see 1, 2, and we're kind of flirting with it as well. And this is a level we talked about before, this 34,060. 34,066 could also be another launching point higher. It's the same thing that we talked about back here. And again, touch, 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 touch. It's been all over this level, and it can only hold for so long. So
right,
kind of the same story in a lot of different pairs.
Excellent. U.S. equity indices also. I mean, something we've been paying attention to a lot lately as they continue to push for new highs. With that, any questions for Nadex, please email us, customerservice@nadex.com. We are here to help. Got any questions for Brian? You can catch him at support@keeptradingsimple.com. And I think we've kind of covered it. Things to be looking at, interest rates globally and inflation, definitely things that are fresh in people's minds, as well as what's going on with the pandemic globally and its impact on the economic recovery. Oil and gold are going to be volatile for a bit. So things that you might not have necessarily traded in the past might be spots where we see some volatility. Clearly, we're seeing it in oil, and gold has broken out of its doldrums, which it had earlier this year. With that, Brian and I will catch you again tomorrow morning. Want to thank everyone for joining us.